Oh boy, was I wrong on Tesla's Q3 deliveries. This was in fact a new record quarter for Q3 for Tesla, but I was expecting Tesla was going to blow these numbers out the park by at least 10,000 deliveries. And that did not happen. This was actually something I felt very confident in. I thought Wall Street was kind of lowballing Tesla, and some of the indicators that we've seen in the past quarter just steered us in the wrong direction. Tesla delivered 462,890 vehicles in Q3, beating technically Wall Street's expectation of 142,000, with total Q3 production that was 469,796 vehicles. Tesla also announced they deployed 6.9 gigawatt hours of energy storage in the quarter, up 73% year over year. I was expecting a delivery number of about 474,000 to 485,000 deliveries. So on the low end, I was wrong by about 11,000. This was 6.4% year over year growth compared to last Q3 in 2023, when Tesla delivered 435,059 deliveries. This is some impressive growth over the years, but it was not impressive enough to send Tesla stock higher today. Considering Tesla stock is down about 3.5%, the expectations were for something a little bit more impressive. I mean, even myself that follows Tesla each and every single day got this one more wrong than I normally do. Most of the time, I tend to be pretty correct on Tesla deliveries, and I was not. Even someone like Dan Ives just came out yesterday and said that they expect, and Dan Ives is one of the top analysts with Wedbush, they expected close to 470,000 deliveries. So they were also pretty wrong. Now, is this a big deal in the grand scope of things? No. Q4 tends to be better than Q3. So as long as this momentum continues, momentum in China, some weakness had to have happened in the US, but as long as things continue to go well as they seasonally do in Q3 and then Q4 being better, we're going to have a pretty good Q4, and I think that's more important, looking ahead instead of looking behind us. We also have the Fed that is starting this interest rate change, and they've already cut rates 50 basis points, and this hopefully will help drive down 10-year Treasury yields, which will help profit margins. This kind of can get complicated to understand, but Tesla is currently buying down the interest rate pretty much in every market that they do business in. So as the Fed in different markets, whether it's China, they just recently did this, whether it's Jerome Powell, the Bank of Canada, or the ECB, they're all on this trajectory of cutting rates. They've started to cut rates, all of them, and they're going to be cutting rates more in 2025. Well, Tesla is buying down the interest rate. So if the rate is 3.5% and Tesla's offering 0%, they're actually buying down that 3.5% interest rate. Okay, so as the Fed cut rates, just to keep this simple, if the Fed cuts rates 50 basis points, rates fall to 3%, now Tesla's only buying down 3% of the rate. And I know it's not a one-to-one parity there, but that's the simplest way to understand this. So as Tesla has another good quarter, let's presume Tesla's going to have a good Q4, margins should get even better versus Q3. And Tesla stock is down 40% from all-time highs, not because of deliveries, slowing down or that growth rate slowing down. It's because margins have gotten compressed. So if margins start to get better from here, then that is really what is going to dictate whether or not Tesla stock goes higher. And presumably margins did get better in the last quarter, since you did start to see a lot of central banks cutting rates and treasury yields falling basically across the world. So I think that is something to look forward to as Tesla reports earnings later this month. The next big catalyst is the Robotaxi event, and I do think now that the delivery number is out the way and Tesla stock is reacting to that, down about 3% in the grand scope of things. That's really not bad considering how much Tesla stock has rallied recently, okay? This, if it was a bad number, you would have seen a much deeper red day today. It's not really the case. You're down 3%. Is that a good day? No. Is that a terrible day? No. But the Robotaxi event could be a catalyst to send us higher. I talked about this before here on the channel, but if we rallied into October 10th, we were likely going to sell off. If we kind of sell off or trade sideways into October 10th, we have a much greater chance in actually rallying after that Robotaxi event. But we do have some other Tesla stock news to get into here in this video, so let's get into it. Within the last 12 hours or so, Tesla has discontinued the base Model 3 rear-wheel drive in the US. The pre-existing Model 3 long-range rear-wheel drive is now the entry-level trim. It comes with 363 miles of range and starts at $34,990, including the federal EV credit. Sawyer Merritt provides a little bit more clarity on this. He writes, "This means that Tesla now no longer sells any cars in the US that use a Chinese LFP battery. A few days ago, the Biden administration raised tariffs on Chinese EVs imported to the US to 100% from 25%, and on lithium-ion batteries and battery parts to 25% from 7.5%. While the Model 3 rear-wheel drive was built in California, it used a Chinese LFP battery, so it didn't qualify for the $7,500 federal EV credit. The 363-mile range Model 3 long-range rear-wheel drive did, so most people likely opted for that trim instead. Combine these two factors, and this is why Tesla discontinued the Model 3 rear-wheel drive." Also in the news today, Tesla is extending its $0 do it signing offer, including tax, for all new Model Y and select Model 3 trims for orders placed starting October 1st, 2024. Including today's Q3 delivery report, Tesla has now delivered a total of 6,690,810 vehicles since Model S production started in 2012, and Tesla is on track to deliver its 7th million vehicle this year. Tesla Energy's strong growth continued in Q3 with deployments up 73% year over year. Tesla's new Megapack factory currently under construction in Shanghai will start production in Q1 2025, doubling Tesla's global Megapack production capability to 80 gigawatt hours. We do have a new note from Adam Jonas. He says, quote, "Most expect the attendees will be shown and given rides in a cyber cab on a closed course. Potential initial commercial introduction could be late 2025 or 2026. It is our expectation that Tesla will offer a dual approach with respect to autonomous ride sharing. Number one, the fully autonomous app-based cybercab, and number two, a supervised autonomous FSD rideshare service. We think the latter of these may get the most attention or have the greatest room to surprise investors, at least near term. In fact, we think the vast majority of rides and miles traveled in our Tesla mobility model through 2030 and into the early 2030s will fall into the FSD/supervised rideshare category, where the vehicles are owned by individual drivers or third-party fleets." Sawyer Merritt writes, "Long-term, whether Tesla Q3 delivery numbers were slightly above expectations by 0.19% or fell short by 0.4%, depending on which analyst consensus you use, is relatively unimportant. What truly matters is whether FSD is improving and if miles driven per necessary intervention are increasing. All eyes now on the October 10th event." Also in the news today, Porsche has begun deliveries of their first ever all-electric Macan EV with a starting price of $75,000 and an EPA range of 308 miles, 0 to 60 in as little as 3.1 seconds. Tesla Energy has deployed approximately 20.3 gigawatt hours of battery energy storage through the end of Q3 2024, surpassing the total of 14.7 gigawatt hours they deployed in all of 2023. Here on the day today, as far as option activity from hedge funds and institutions, they seem pretty undeterred from the 3% sell-off we are seeing in Tesla stock. You have 151 different trades totaling $105 million with a positive order value of 73%. Tesla's short interest of free float sits at 2.76%. You have $19.8 billion currently sold short in Tesla, totaling 76.74 million shares that are currently sold short. You do have return shares, aka covered shares today, of 201,000, borrowed shares or shares that are being sold short at 307,000. That means you're actually seeing a positive amounts of shares that are actually being shorted today. So on net, you have shorted shares of almost 106,000, which is kind of expected on a day where Tesla is down 3%. We did have a little bit of economic data that came out with the ADP employment change. Wall Street was expecting 120,000 job ads for the private sector payroll report for the month of September. We actually came in at 143,000. But there's a pretty weird discrepancy that happened today. Take a look at this post from David Rosenberg that says the bond market doesn't seem to have figured out yet that in raw, non-seasonally adjusted terms, ADP employment plunged negative 260,000, which was an unprecedented decline for any September since the series began in 2010. Fishy? So basically, if you just look at the raw numbers themselves, the inputs that go into ADP, you were actually very negative. When they seasonally adjust this, when they basically revise it, if you will, then you got a positive number. But just looking at the raw inputs, it was pretty bad. Now, Wall Street doesn't care about that. They just look at the headline number and what is released to us. But if those algorithms, if people start to talk about the actual weakness you've seen in the report, that could be a problem, although ADP is always a secondary to non-farm payrolls. So really the attention is going to be on the non-farms this Friday. In other news today, the Saudi oil minister has said that prices could drop to as low as $50 per barrel if so-called cheaters within OPEC Plus don't stick to agreed upon production limits, according to delegates in the cartel, according to the Wall Street Journal. BLAS says, quote, the oil market looks oversupplied in 2025, and that means lower rather than higher prices. So given a binary choice between $100 and $50 for next year, I'd take the latter bet. But even though you have these negative comments today from Saudi Arabia, oil is still up 0.5% today. Really following the situation in the Middle East and the presumed retaliation that Israel is going to give to Iran in the coming hours, days, or weeks. Also, not really helping out Tesla today, Stellantis U.S. auto sales extend free fall. In third quarter, Stellantis reported U.S. sales Wednesday of 305,294 from July through September, a 19.8% decline from the third quarter of 2023. But yet the consumer's doing well and the economy is on a path to a soft landing. Yet, Stellantis deliveries are down 20% from Q3 of 2023. Make that make sense. The company was expected to be the worst sales performer of major automakers during the third quarter. Stellantis' disappointing sales are the latest problem this week for the car maker, which cut its 2024 profit margin forecast. It was reported that GM said the company sold a record 32,195 EVs in Q3 2024, up 60% year over year and 46% quarter over quarter. BYD had its best sales month ever in September 2024, with 419,426 cars sold, up 32% year over year, with 252,000 of those being plug-in hybrids and 165,000 being battery electric vehicles. For the third quarter, GM delivered 659,601 vehicles, only down 2% compared to a year ago. So judging off of Tesla's almost 7% year over year growth, I think that looks impressive compared to the industry that is, as a whole, just struggling. I guess that's what happens when you raise rates at the fastest pace in 50 years. Those long and variable lags, I guess, in the end, do actually catch up. Sentiment for Tesla today over on Stocktwits is bearish at 41. Yesterday, it was bearish at 28. Today, message volume is extremely high at 77. Yesterday, it was just high at 55. And participation ratio today is high at 56. Percent of stocks trading above their 50-day moving average today is at 57.72%. Pretty much flat on the day today. CNN's Fear and Greed Index is unchanged from yesterday. Yesterday it was at 69. Today it's at 69. The 2 and 10-year yield curve inversion is uninverted, 16 basis points. That's actually steepening today, up about 3 basis points. And that's because 10-year treasury yields are up 4.5 basis points, likely pricing in a less aggressive Fed because of those ADP employment numbers that came out this morning. And that's what David Rosenberg meant when he said the bond market doesn't seem to have figured this out, that when you actually look at the raw inputs to ADP, they were very negative, something we have never seen before. And we will see how seasonal adjustments play into the non-farm payrolls that come out this Friday. With that said, Tesla stock is holding up at this line that I've had drawn on the chart for a while. This was the gap fill level, about $246 per share. Tesla bounced at about $242 per share earlier in the day today and is back up to about $250. I think 250 is an important level as well, more so psychologically important, but it's really 246 that is the important level, and it looks like you're staying above that. Tesla's RSI is back down to 58.47, so we're gonna have to see some more upside momentum to really change course on the RSI, and the MACD is actually still at 10.49, the signal line at 9.05. So if the yellow line, in simpler terms, goes below the blue line, that in the short term can be a negative sign. We're not there yet, but you have started to curl over a bit. Overall, October tends to be a pretty rough month for markets. Yesterday, the S&P was down almost 1%. At one point, the S&P was down about 1.5%. That has kind of been the theme of the first day of the month for 6 out of the last 10 months, and then you end up closing positive most of the time if you get a really negative first day of the month. So I wouldn't read into yesterday too much. Besides, we did have a red day. It was a rough day. That tends to actually lead to a positive return. You've seen this in September. First trading day of September, markets were down 2%. September actually ended up closing positive about 4%. August 1st, you were down 1.46% the first day of trading in August. What actually happened? By the end of August, you closed positive for the month, and you can kind of just go back to other months as well. And this tends to play out pretty accurately. Even May 1st, 2024, you were down the 2 days heading into that, and you ended up rallying big time. So October doesn't have to be a bad month, but if election uncertainties start to creep in, if more of this Middle East uncertainty starts to creep in, if Israel does retaliate something, forceful, then I could see more fear growing in markets. But as I've said for a while now, I'm really not concerned about the economic data for September. I'm not that concerned about the economic data for October. After the election is when I think the economic data may start to come in more accurately, and that's when I would be a little bit more concerned. So we'll see what happens. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.